Everybody, hopefully everyone is doing amazing, everybody is doing great. And over here I want us to look for what happened today. So it's on a Wednesday or Thursday, so we're here again looking onto the charts. Yesterday I didn't do a video review of this trade, so that's the thing I'll start with before I dive in maybe onto today's trade. So yesterday what happened is the day ended negative. It was a loss for the day, and our stop loss was hit, as you can see. And I'll explain where I noticed I went wrong. And yeah, it was a lesson because I noticed one thing that I knew, but I really didn't look or take that thing into consideration that much. So over here, what I did see yesterday is me going to the 1 hour time frame. And this is a trade. So what I'd seen is these lows. We had this low, so I'll have this extended line. So from that low, yeah, you can see over here we had this grab. You can see this low, they had relative equal lows, but to me, as I was analyzing the market, I saw we had a big, as you can see over here, these weak overlapped went with these overlapped these low, as you can see. So the sell side liquidity for me had been grabbed. So that's how I had seen these yesterday play out. And after I noticed that is we had this order block, which was a bearish order block, which was to support prices lower. But using the mean threshold, I didn't want to see a candle closing above the mean threshold of these. But what happened, we had these candles closing above, the other candle rallied lower, which didn't take this low, and then you can see this other candle that closed also above the midpoint of that. So all these, and we have this high as the draw on liquidity. But generally what I want us to see is price deliver into these daily volume imbalance. You can see these red lines. For those who don't know a volume imbalance, I'll be talking about it in another video. And for this instance is we have this candle, we have this candle number 1 and this candle number 2. When we don't have a body in between, as you can see for this instance, we have candle number 1, number 2, number 3. We have candles, a body, right? But inside here we don't have a body. So whatever we are referring to the volume imbalance is from the low of this candle, the open, the open of this candle to the open of this candle. So this gap is what now we call the volume imbalance. So the same inside the daily time frame, we had an example like this, whereby we had this gap that hadn't been traded into. So that's what I had drawn here. And so now I'll get rid of this volume imbalance because already it has been traded into by this candle, again violated, right? So with these, after I noticed we had this candle closing above that main threshold of that order block, so I dropped into the 15 minutes time frame. And what I did see is I was watching these in inversion fair value gap, whereby we had these candles respecting it by closing above. You can see how these candles were respecting this main threshold, or were respecting the whole of these yellow. Let me shift these. Yeah, you can see over here these candles were closing above this inversion fair value gap, and over here I saw I wanted to see these inversion fair value gap being respected, and once I noticed we had these candle closing, as you can see, around the main threshold. You can see how the main threshold was being respected. So upon this candle rallying lower, I did enter my trade at around the main threshold after I'd seen this candle retracing lower. Then we had this kind of move higher, but then we had these retracements lower. This inversion fair value gap was violated. Then we had this formation of this fair value gap, and in these situations I really didn't take or rush to take another trade because it was a clean sell. Because of a reason I'll be talking to you. The mistake I realized I did make is if we go to the higher time frame, maybe the daily time frame, remember I want to see price deliver to this volume imbalance. This is the volume imbalance I've been talking about. So from the low, from the open of that candle, yeah, over there, to the from the open of that candle to the open of this candle, yeah, that's the volume of imbalance I want to see the market trade into. As you can see over here, I want to see the market trade into here. We had a reaction of this volume imbalance low, but we have not yet traded into. Also, yesterday what happened is we had two draws on liquidity because we had these daily fair value gap over here. As you can see, we have a fair value gap from this candle's high to this candle's low. This is a daily fair value gap, but I wasn't that much in I really wasn't careful to say, because we had these, but I was fixed with my bias. I wanting to see price deliver to this daily volume imbalance, right? But what happened today is the market delivered into it. Then you can see this reaction of. So the mistake I made yesterday is I was married to my bias. If I was to be open with my price reads, because we can see over here we have these bullish arrays being disrespected, right? We have this volume imbalance. It was respected, but again over here it was disrespected. We can see how we had these displacements. These displacements usually gives us an idea somehow when price is maybe rallying lower or rallying higher. For this instance, you can see how we had large heavy candles. These bearish candles were so heavy as compared to these bullish candles. You can see over here we had a slight consolidation. We had also this bullish array being now disrespected, which now was to support prices lower. We had a fair value gaps arrays being formed, whereby we had this fair value gap over here, which was created. The market tapped into the fair value gap, and you can see how it did sell off rapidly. And yeah, if maybe we could have taken a trade, or I would have been open about this trade, then at that fair value gap and my stop above there with the 1 to 2, then my TP would have been hit. But I think it was a good lesson never to be married to bias. As long as we don't have a clear draw on liquidity, or we have true draws on liquidity on either side, then I ought to be keen on the price action, what the price action is telling me. So yeah, that happened, and you can see the market rallied lower into these daily fair value gap, as you can see. And now what happened today, I came in and over here inside the 1 hour time frame, what I noticed is we have these liquidity sweeps. We have these sell side liquidity sweeps, and our fair value gap that was created there, the market traded into that. Then we can see how it dropped. Then from this low we had also these sell side liquidity sweep, and yeah, market tapped lower. And if I can divide these into 4 quadrants, maybe take the upper quadrant and the upper half and divide it by 2. Let's see whether we had a reaction of the upper quadrant. Yeah, you can see the market tapped into the upper quadrant but never tapped into these consequent encroachment or the midpoint of these daily fair value gap, because as you can see from the daily time frame, this is the daily fair value gap I'm talking about. The market dipped into it, and now I was observing this price action inside the 1 hour time frame. And what I noticed is the clear or the sell side liquidity grabs, they tap into this key level, which is the daily fair value gap, and also inside key level or our trading time zone, which is the New York kill zone from 7 a.m. to around noon. Yeah, so as we were approaching our New York time zone, what I noticed is we have reacted of where is my we have reacted of this daily volume imbalance, and now I was watching on the price action around here. So I noticed we have this bullish order block, right? As you can see, we have this bullish candle inside this bearish market. So to me, it's a it's a bearish order block, whereby it should resist higher prices but support lower prices. But you can see over here, this candle not only closed above the mean threshold of this order block but also closed above the order block, meaning the order block has been violated. The bearish array, right, because it was to support prices lower, but now it has been violated. This candle closing above the order block, now I want to see it support prices higher. So the market rallied lower, tapped into this 1 hour order block, which I labeled here. And you can see I was watching the price action around this level inside the 5 minute. It was 1 minute, it was too fast, but I caught a trade inside a inside 5 minutes and time frame, and my 1 to 2 was reached, of course. So yeah, inside the 30 minutes time frame, what I noticed is I was watching these candles high. I wanted to see this immediate rebalance, which happened. We had this candle close here, another open, created an immediate rebalance with this candle. So this I literally caught the low of this candle, the 30 minutes candle, because I was watching this immediate rebalance and the movement lower, because inside the 15 minutes we had these I don't know, this order block, this 15 minutes order block. So as this candle closed, this movement lower into this 5 minutes fair value gap, we had a fair value gap that was being created here. So my entry was at the low of this down close candle, was tapped into, then you can see how the market rallied and straight to my TP. But the 15 minutes time frame, what I was watching is we had this grab of liquidities below here. Remember, the first move is usually a fake move. We had this drop lower, creating bearish arrays. As you can see, the bearish arrays were being violated, but bullish arrays that were being formed were being respected. We have these fair value gap. The market dipped into it. Then we can see these rally higher, creating this order block. The market rallied lower, tapped into this order block, respecting this bullish array, then continuation higher, market retraced lower, dipped into this 15 minutes order block, which was paired with the 1 hour order block, as you can see. Then we had this push higher, and my target was this 4 hour, because maybe the market could react off these fair value gap. I really, because we also didn't really feel this daily fair value gap, the market could react of this 4 hour fair value gap, then rally lower. So that was why I was targeting this 4 hour fair value gap low. If we see a reversal, then well and good. But for now, because we have seen these candles closing above these 4 hour fair value gap, you can see the low of this candle. The low of this candle. This candle's body has closed outside it. So for me, I'm expecting to see bullish momentum to this level. Maybe from tomorrow or from next week. I want to see price retrace to these levels. So as usual, remember, I'm not trading DXY. I usually have the opposite trades. If I'm buying DXY, the place where I'm buying DXY, I am selling for Euro USD. So it was a sell for Euro USD at this same level, and the same 1 to 2 TP, and yeah, we were tapped in, and that was the trade for today. So I'll also usually give what I usually want to look for when taking these trades, and want to emphasize over here once and for all. So number one, we must be at a key level, which for this instance mine was this a daily fair value gap. Number two is timing. I must do my timing right, which for these or most of my examples is New York kill zone or the New York session. Number three, what I want to see is I want to see a market maker sell model to play, and what do I want to see in this market maker sell model is I want to see sell side liquidity being grabbed. So I want to see a sell side liquidity grab. Then number four, I want to see a clear market structure shift. I want to see clear market structure shift, which usually is 30 minutes and also a 15 minutes. 30 using the 30 and the 15 time frames. Then after I've seen this clear market structure shift, I want to see if for instance our example today here, if you are buying or if you're looking for buying opportunities, is I want to see bearish arrays. I want to see bearish arrays being disrespected. respected. Then number 6, I want to see bullish raise being respected. So respected. Yeah, so these are the most common things I want to be looking for, and usually they apply in every time frame. For instance, at this trade I took, I was watching at the price action from this 1 hour order block, because inside the one maybe someone who could be using the 1 hour time frame as the higher time frame would go to trade inside the 1 minute time frame, and maybe would have used this 1 hour order block as the key level, and then maybe look for a clear market maker sell model inside that 1 minute. So as I was watching these, and I think if I was that confident enough, my trade would have been at around this level, because I literally got this over here, but I wasn't really that confident to take that trade. So to someone who uses the 1 minute, maybe because the market has already, you can see we have this 1 hour order block, we have this sell side liquidity grab, the market has rallied higher, created a market structure shift, right? We have candles closing above this high. You can also see bearish arrays being disrespected. And what do I mean by bearish arrays? We can see this fair value gap here that was created, was to support prices lower, but this candle closed above it. So after immediately seeing these bearish array being disrespected, and also a market structure shift after a reaction of this key level, and also after sell side liquidity have been grabbed, and also being inside a kill zone, which is New York session from 7 to 12. So everything has played part, and maybe we are in alignment with our checklist. So immediately we have this candle open, then or any other candle, then maybe place a trade, maybe stop loss, go to the higher time frame, and ensure wherever your stop is, you won't be caught out. So yeah, maybe yeah, it's this trade over here. So also ensure maybe the stop should be at these order blocks low, because everything has been respected. So we have this order block, so this trade, yeah, around there, with the TP being this level. So it could have been a 3 to 1, but I want to more cautious. Want to see a clear play before any rush. So I think this trade for me was a cool one, and that was it for the day. As you can see, here is always this is my checklist for every trade, and yeah, after I've checked for that and I see everything aligning, then I can take that trade confidently. If I lose, then it will be an opportunity from which I learn. So this is it for this video. I want to thank you. Please like and subscribe on this channel, and want to maybe talk to you later again. So thank you, and be safe.